Yo, what's going on? It's your boy Check Investing back with another YouTube video here on the daily log series that we're doing on this Check Investing channel. Thank you for watching so far. Thank you for all your support. Thank you for everyone who is following this particular series and learning a lot from it. So am I at the same time. I use this as my end of day daily log. So I'm very excited to talk about what we saw today. We're going to be going over a very specific concept, and that is the exact times when you should, when you open up your chart and see this, close it and walk away. Okay, we're going to be talking about this condition. All right. There was some pretty crappy price action today. There are always factors that will point towards why there's likely to be price action that's crappy. Okay. And we're going to go over those. All right. Personally, I took some losses today and I'm not too happy about it. But, at the end of the day, I had a really, really great Thursday and Wednesday. Actually ended up passing two more accounts. I got six figures, got like just about six figures more in funding. Super happy about it. But Friday was a bit of a down day. So, trying to do this end of the week log and just kind of tell you exactly what I was thinking today and what I should have done in hindsight. Okay. Another thing that we'll talk about as well is, the ICT22 model. That is the entry model that we utilize on this channel. Okay. And I'll be teaching you how to enter that, how to utilize it, how to make money from it. And the last thing that I want to talk about is that, if you like the video, press the like button. Appreciate you for pressing it. You're the GOAT. Press the subscribe button as well. I mean, while you're at it. And, like as you're subscribing, you might as well press the notification bell. That'd be cool. And you can leave a comment below if you have any questions or just to help my channel grow. Just, leave a comment. And every time you like that video, it helps me just grow a little bit. I'm doing this for free. And I love to share the knowledge I've acquired after several, not even just hours, multiple days worth of hours, maybe even weeks worth of hours of studying. Okay. Now, also have a free Discord below as well, where you can, chat with me, ask me questions. And, I put my bias in there pretty much daily and talk about the trades I took. And, yeah, without further ado, let's get into the video. Now we're going to start off with a top down analysis. All right. We'll go down from daily all the way down to the 1 minute. And around the 1 minute, 5 minute, I'll tell you guys what the 22 model looks like and how you could have used it to make money. But then also we'll talk about conditions where, right, like I said, when I get to the 15-minute time frame, really, that's when I'll tell you guys about, how you could have known you should just close your charts. Now, on the daily, what do we have, right? So yesterday we wicked higher back into this weekly. What is this level right here? Let's go on the weekly real quick. This level here on the weekly is this fair value gap over here to the left. After price closed through it last week, we took out some key lows and then swept liquidity, including the previous week low, and then reverted higher, right? This is a very bullish candle close. Let me tell you why. Because we're technically mohawking outside of this weekly FEG. If we were really bearish, right, and coming to take out this low, I would not have wanted to see price close back up so heavily in the range, right? You can see it's pretty much closed above 50% of this candle, right? And it crossed this open line. This now becomes a bullish order block, really, because we purged liquidity, right? And we've crossed this open, okay? Now, we have not come past this bearish order block over here yet. So, I want to see how price reacts from this level, and it could run lower and could run higher. I just want to see how we open up next week. But because of this price action, we sweep in liquidity and come back such high in the range, right? Either price action is just super ugly or we actually are trying to run higher, okay? Now, that's what this IFVG level is. And you can see that yesterday, we came into it a little bit more and coming into this bearish order block, rejected from it. Also, we have this daily FEG SIBI here that we rejected from, okay? I talked about how to anticipate daily reversals. You should go watch the video I made yesterday, right? And we came back on top of this daily SIBI FEG and closed on the top of it and ended up using it as support to run higher today. I ended up taking out the previous day high. And we took out this previous day high, I believe, even before the AM session started. Okay, now going to the 4 hour. On the 4 hour, we ran higher yesterday, right? Ran lower, found support on this IFVG, right, by the PM session, and refilling this 4 hour for value gap right here, right? That is nested within this daily inversion for value gap. So multiple levels for price to react from that we're converging at. And you can see that we closed in the upper half of this 4 hour IFVG and we start to reject away, it tells you that we are bearish, and we're probably taking out some of the lower time frame LRRs, right? Low resting liquidity that is low resting liquidity runs, right? LRs, right? That are above here, and price starts running, right, and going into the, by the time it's AM session, we wick higher, end up taking that previous day high, come back in the range, right? We close above the mean threshold of this bullish order block, right? Price starts to run higher into this 4-hour SIBI, right? So we have this high that we took out that was nested inside this 4-hour fair value gap SIBI, and price ended up rejecting back into it. That's because this is a very sensitive area, right? It's what we call order pairing. There is a key high. It's nested what's inside a fair value gap. I always talk about it's pretty sensitive. So anticipate retracement. So price retraced, but then because we're still bullish, right? We're having bullish delivery. Price is running higher here. Okay. So double check something real quick. So you can see there's even an SMT here as well, right? So this is something that I did not see coming into the morning, to be fair. Now, there's S&T between the 4-hour here on ES and NQ. Why is that? Because we didn't even come back into this 4-hour value gap, but we did on ES, right? So this in itself is a form of S&T, telling you that we are likely to be bullish. If you see S&T on the 4-hour, bro, we're bullish all day. Don't take a single short. It's very, very unlikely to work. Okay? Thank you very much. Now, what is this green line? Green. This green is actually the 20 to 30% range of the weekly candle, right? And you can see we did not close inside of that. That's what we call the TGIF. And you know, I believe that typically only works once we've made the high, right, of the week, which we did going into the AM, and price now revert back to it. So next Monday, I'll be looking to see if price can come back in here, okay? Because that's what ICE talks about. That if it doesn't get hit on Friday, it doesn't come back into this range on Friday, right? It's called TGIF. Go search it up if you haven't heard about it. Price will typically revert back to this on Friday once we bring the high of the week, which was here. Okay. Now, the next candle ended up being a bullish one, right? Because we have SMT, so don't anticipate a lot of retracements. And we had short-term pullback in the last couple hours of the day. On the 1 hour here, right, delivering from this 4-hour for value gap. The next target is this external range high, right? Because we had this internal range liquidity that we came back into. What is internal range liquidity? That is a fair value gap. Once you return back to a fair value gap and you reject away from it, break market structure, anticipate the next high to get taken out. And it's nicely coincides with all of these LRRs, right? And end up taking out the previous day high. What time did we do that? By 9:30, right? Once that happened, price is likely to chop, right, for the rest of the AM session at the very least. And if you have a very large move overnight, likely to chop for the rest of the AM session. And then Friday PMs are usually garbo, right? If you've had a very expansive week, which we have, right? Friday PM is usually typically very trash. So I don't trade Friday PMs typically. I did today, but that is a note to myself that I really shouldn't be doing that going forward. Okay. Now, once price rejected higher, we did come back into this 1 hour for value gap, and you can see we came back into this green box, right, which is a TGIF range, ended up tapping that, and then ran higher, and then created a redelivered rebalance price range, which is this candle's low to this candle's open right here, right? It's this body that has not been overlapped by you know, a wick on the right hand side. It's only this wick right here, body, and then this wick. This is a PD array right here. Study it, you'll see it all the time. Redelivered rebalance price range, right? Because it's balanced. We went up and down, then went up again here, right? It's hard for price to run back through this level. It's very balanced, okay? And we already tapped this parallel gap once. We don't need to come back down here, okay? This is not an intermediate term low. So price comes back here, returns this redelivered rebalance price range. Your next draw liquidity should be above here, but because it's a Friday PM, this is where time of day comes in, right? It is not likely to reach that target. If this was like a Thursday or a Wednesday where price is still ranging higher, this would have definitely got hidden between 3 to 4 o'clock because it's a daily candle that's bullish, and a bullish daily candle usually makes the high of the day from 3 to 4 o'clock, like we talk about on this channel. But there are certain times of the week that you should not be trading. That is Monday PMs and Friday PMs. Do not trade those. Very likely to lose. All right. Now, we come back and you just fail to come to the high of this wick. Then we end up making this wick, right? And you can see we're reacting in the lower half of this wick right here. This is a sign, right, that you should be, you know, be cautious. Okay, be cautious. Because yes, we come back into this redelivery rebalance price range right here, but then we end up close to the consequent encroachment at around 3 o'clock, right? And this is a sign that, hey, brother, we're not going anywhere, right? Friday PM is trash. Now, let's get to the 15 minute. Now, here's the first sign that once it hit 9:30, you shouldn't be trading anymore. Okay. Look at this opening range gap. Yes, it's massive. Ice-T talks about good volatility on days where the opening range gap is massive, but a gap this large, what does that mean? It means we've moved a lot pre-market and overnight, right? Moved 100 points in London session, and then before 9:30, we moved 375 points. I mean, bro, like all you should be anticipating for the rest of the day is just accumulation consolidation, right? Or very, very high resistance price runs. It's going to be very hard. And you need to make sure that you are really watching every single parameter to make sure that you're going to be right, because even one thing could set your trade out to be wrong. All right. So, and the fact that Friday PMs are even trash, like this is just an even more sign that once I saw this move overnight, I should just close my charts, right? It's not a day you should be trading. Okay. Now, we end up wicking higher here above the daily previous day high that we swept. We closed outside of the weekly IFEG level here, but then came back into it, right? Created a key low here, swept that, right? And this is the entry of this is the 1 hour FEG that I talked about that formed here. Is at this level, at this low, right? And price ended up coming back into this 1 hour FEG and sweeping this low, but it did not do that on ES. You can see SMT right there telling you that you're immediately offside, right? And then price is going to run in the opposite direction. Price ends up inverting this 15-minute fair value gap, right? When this reversal happened, 10:15, between 10:15 to 10:45, we start running higher. By 11:15, we make a high, retrace a little bit. Then at around 12 p.m., we continue to reverse on that retracement, make a new high above this high. Failed to come to this buy side liquidity because it's Friday PM, trash Friday PM, okay? End up inverting this 15-minute fair value gap and then retracing back down to this IFEG, bouncing between two PD arrays. PD array bounce effect. I talked about that 2 days ago. Why does that happen? Trash conditions, okay? Now on the 5-minute, price expands heavily, right? Starting 8 a.m. all the way up here, right? We had really good housing starts data at 8:30. So that's why we were really bullish today. People just want any sign to know that the economy is going to continue running. People start buying, right? By 9:30, we have a really large swing lower, right? To come back right into that 1 hour for value gap. We end up getting there, right? And purchase low, SMT, break market structure above here, finally close above this 15-minute IFVG, run higher. Bearish order block that's forming right here on the high of this weekly FPG BISI. Look at how we're reacting with these levels. That's why I like to keep the weekly on my page. Price ends up coming back down to this 15-minute fair value gap. That's an IFVG now. Reacts in the upper half. Runs higher, taking out this high. When does this happen? 12 o'clock. So we start to make that run against the LRRs that just formed, right? Post 11 o'clock. So if you see a retracement post 11 o'clock before 12 will typically be a good time for it to run against that retracement. Okay. Price runs against that retracement, especially on a bullish day, makes this high, right? Around 120. And then it pulls back and then ends up just basically having a consolidation for the rest of the afternoon. Now, this is where I'm going to talk about the 22 model, because this is when you start to see some 22 models. Okay. What's 22 model, right? Low that forms here. This is a low. Purge that low, right? Break market structure above a high, fair value gap, returns back to that gap, runs higher, right? Over here, you could have had, price running down, and then eventually we reach a PD array over here, then we bounce, right? And then we react from this fair value gap and run higher, right? Now, what makes a 22 model valid? They must always have a bias where price is going to go. If your bias is wrong, your 22 model is likely to fail. Okay, so that's the only reasons why a 22 model should fail. If you have the right bias and you have the right time or higher time order flow, you know where SMT is, you know where the opening range gap should be headed to, you know what's going on with a higher time frame PD arrays, then you should be straight on your 22 model. Very high probability, right? Okay, now you see the first 22 model that they form here. So we are coming up here overnight. And then by 9:30, we've made this high. We struck the previous day high. And then immediately coming to 9:30, we purge this low. Forms a fair value gap that inverts these fair value gaps right here. Price returns back to this bearish order block and then runs lower. Fails to come down to this 1 hour FEG. You see? because that 1 hour FG basically formed here at 10 o'clock. See? And then price ends up sweeping this low, right, with that new 1 hourly candle forming here, coming back into this 15-minute SIBI, right? Let me show you what that 15-minute SIBI looked like. This is that 15-minute SIBI that formed right here. So price came here. I'm anticipating that we're going to react from here to come back down into, maybe at the moment, I was honestly very bearish. I wanted to see price run lower, right? And come back down, take out some of these lows right here. In hindsight, that doesn't make any sense, right? Because that 4-hour SMT that we talked about before, with 4-hour SMT, price is just likely to run higher. Plus, the daily candle had already, formed that bullish order block, right? And we had swept the previous day high. It's not very likely that we are, likely to return lower based on all those factors. Okay. So once we hit that 15-minute SIBI, I took a 22 model short that we could talk about. Okay. I took that once price came here, inverted this fair value gap, came back higher. Hard to see this 22 model, but here it is. You have this high, low, higher high, break a market structure below this low, returns back here. That's where I get in, runs lower, right? But then comes back higher after tapping this 1 hour FEG BISI level because we're really bullish and there's SMT here. And so when price breaks market structure like that, I should have gotten out the trade. But to be honest, I did not see this SMT. I did not see this fair value gap, right? I wanted to see price run much lower, and price ended up reversing on me. Okay. And the reason, and this is why it's important that, especially on days like this, you need to be hyper vigilant about every single PWA, right? That's happening. We have another 22 model that forms here, low, high, lower, low, right? Breaks the market structure above this high, fair value gap, returns back to that, runs higher. Okay. Because we're bullish, this was valid, but because we have this 15-minute FEG in the way, I would wait until the 15-minute closes above this FEG, right? You don't want to have anything on a higher time frame that is in your way because higher time frames trump lower time frames, right? Now, yes, the 4-hour there's 4-hour SMT, right? And so price should technically run through this 15-minute IFEG because the higher time frame on the 4-hour order flow is going to trump this 15-minute one. But a lot of times you can see just very short-term, very deep retracements. Maybe take out this low one more time before running higher because you have this 15-minute FEG in the way. So I'd rather just see it get above that. We make another high, right, by about 11:30. And the price starts breaking down, having that 11:30 retracement. Typically, after 11:30, IC talks about this particular macro that kicks in where, you can retrace against the recent range, right, and take out the most recent low after 10 o'clock, which would be this low right here, which you can see we end up taking out, right? The most recent low after 11:30, right, or before 11:30, sorry, was this low. You can see this low gets taken out, right? And then by you come back into this 15-minute IFEG range because at this point we've now on the 15-minute candle, think about it, we've closed above this level, right? And so this is now turning into a support level, this IFEG SIBI. We have a low here, high, lower low, break of market structure, right? Fair value gap, very tiny fair value gap right here. Price returns back to that. That's an entry. That's an entry. Now, unfortunately, I was in a meeting. I didn't take that. Price runs higher. Okay. Consolidates for a little bit. First stage accumulation, right? And then in this new MMBM. Second stage accumulation right here. Price runs higher. Okay. Ends up taking out all these LRR moves. Fails to come out of this high. And starts breaking down. Why? Because we are in that Friday PM session where price action is likely to be garbage. Okay. That's what this is. Plus, ES ended up taking out that high. So now, once price breaks market structure to go lower, we know that there's a potential. Oh, sorry. Let me make that clear. You can see this high over here. ES ends up taking it. We break market structure lower, right? NQ is not likely to take out this high at this point. So you need to be watching all of these factors, my guy. Okay. Hopefully this video has been helpful. Thanks for watching. I'll catch you guys in the next video. Make sure you press that like button. Don't leave without leaving a comment. And I'll see you guys in the next video.